Hello, I'm Dr. J, and this is the Volatility Sonar Report. The reason it's so important for you is this is like a heartbeat for the market, folks. It tells you whether or not we expect the market to go up higher dramatically or down lower dramatically. As VIX moves up, they're expecting dramatic moves. As VIX moves down, that means volatility is going to be more stable. The markets are going to be more stable. Here's today's report.
Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, I'm Jamie Tyrrell with Group 1 Trading. Well, what looked like it might be a down day in the broad market has really turned around. It turned around pre-open on the jobs report. After last night, the report surfaced that Bank of America needs $34 billion in additional capital, according to the stress test, whose results are expected out on Thursday. We saw the market down about 1% pre-open. But when the ADP jobs report showed that job losses was slowing, the market ticked up. S&P 500 ticked up 10 points, and as soon as the report came out, we opened up and we've stayed up small. The VIX has really moved down. We're moving under 33 in the cash now, which is a level we haven't seen in several months. We are about 32.90 on the cash. The front month future is about 33.5. That's the K future. And something you can see developing is we have what is termed contango, where the back month futures are now higher than the front month. Previous to that, we'd seen the front month always running a bit hot on the back months, but we are seeing the front month step down with the cash, and the back months aren't stepping down quite as much right now. We've had some big trades, and the trades continue to be on the put side. With the walk down from 45 to 33, we've seen more and more put trading. The June 25, 30, 35 Ironfly traded for 340. Now the Ironfly is the opposite synthetically of a butterfly. So when the customer sold that for 340, they were actually taking the same risk as buying the 25, 30, 35 fly for 160. So they'll profit, they'll make 340 if it finishes right at that middle strike 30, and they'll lose their 160 if it finishes outside of 25 and 35. Also in July, another person keen on that 30 line. The July 30 puts were initially sold for 120, and they've been trading as the futures dropped down 175 just now. They traded 1,000 times. So everybody seems to be focusing on the lower level puts. We're not getting a lot of play at all in that May upside calls, which some people thought would get a lot of play with the stress test coming up. The May 45s are down to a dime. The May 50s are at a nickel. So people aren't assigning a huge probability of us walking right back to where we were in March in the VIX. People are really focusing on lower VIX levels. We'll see where it goes from here. This is Jamie Tyrrell with Group 1 Option Monster.